Hello, I'm Peter Armitage. This is ANALYSE THIS. In this program, we like to take an in-depth look into companies that we think are interesting investment opportunities on the South African global markets. And today we're going to talk about Imperial. With me in the studio is Matthew Stricken, who covers Imperial. He's an analyst at Anchor Capital. And Matthew, Imperial's an interesting one. I think before we came to the studio, we were talking through some numbers. Imperial's got down to about an 8 times PE multiple, which we think is very cheap. That's based on the next 12 months of earnings. And if you put it in context, one of the high flyers on our market is Naspers. Now, Imperial's earning roughly half of what Naspers is, but Imperial's value on the market is 35 billion rand, and Naspers' value is 535 billion rand. So a very cheap share, and then one that we think looks pretty interesting from the next 12 and 24 months.
Yeah, Pete, I think they reported some reasonably resilient first half 14 results.
Let's call up a slide and look at those numbers.
Logistics was the sort of standout performer, I think specifically African logistics. The auto and industrial businesses were under some pressure, particularly because of passenger vehicle sales being somewhat lower than they have been in recent years. Margins were under pressure there, and therefore we saw operating profit down quite a bit. But the financial services business held up quite nicely despite the drop in revenue, which was largely due to the exited Regent businesses. And in fact, if we look at the sort of comparable financial services business, that was in fact up around 20% or even more.
So you've really got a tale of two different segments of a business. You've got the car-related side, which took quite a whack, but the rest of it grew quite nicely. The comparable number showed earnings up about 8%, which wasn't too bad. But for the full year, that's probably more likely to be flat. Let's look at the next slide where we look at Africa Logistics. I think the point is the Imperial share price has tended to follow car sales, but what Hubert Brody, the CEO, has done magnificently over the course of the last few years is diversified the business. Now that's only down, the car sales is down to probably 30% in terms of profits to the business. But African Logistics, as we can see, is showing great growth in the first half.
Yeah, revenue is up 26%, which is obviously very strong. Operating profit reported up sort of 62%, although that's off a very low base due to the 2013 strike. On a comparable basis, we're looking at operating profit up about 22%. The rest of Africa, so the non-South African logistics business was really the standout performer there. Operating profit up around 54%, margins improving, contracts gained. It's just a really nice story, as well as some nice acquisitions coming through there as well.
Let's look at the next slide. We look at the operating profit split. And this is really the story that people need to pay attention to. The business has been derated as a whole because the distribution business, and that's really primarily the import of Hyundai and Kia vehicles. That's been the big profit spinners. Although, again, within that business, they've bought a lot of other brands and local distribution businesses. But quite surprisingly, African logistics up to close to 20%. International logistics well into the double digits. So in fact, you've got a non-South African story, which in a year or two, you could see being 40% of the business.
Absolutely, Pete. The car sales part of the business is roughly 40% of operating profit at the moment. That's the distribution and auto retail parts. So there's a substantial earnings base there that isn't car sales dependent, and even more importantly, isn't new car sales dependent. Obviously less than that 40% is going to be new car sales dependent, and I think this reflects a far better balanced group.
Yeah, so you've got basically a well-balanced group, probably some nice 3 to 4 year growth prospects. They're still going to suffer a little bit from particularly the impact of currency on the cars, because the imported Hyundai car is costing them 20% more. They've only put prices up by 10%, so the margin gets squeezed a little. But the market's putting a very low multiple in a business that's probably got some in quite nice shape for the next kind of 3 to 5 years. Let's look at the next slide. We look at the logistics 4-year operating profit.
This is up 21% on a compound aggregate basis. Revenue up 24%. It's a quickly growing business that has made some nice acquisitions, as you mentioned, in Africa, and they just reported another one in the first half of 14 results. It's the most exciting part of the business, I think, certainly is what we believe, and it remains the sort of largest target for capital allocation within the group.
And it's that kind of reasonably steady growth, core business, a lot of contracts, a lot of warehousing, a lot of business in that mix, which is of an annuity type revenue. And that will kind of power through, and then you've got the kind of auto sales going up and down in between. And in fact, the opportunity is when auto sales come down, the market then puts a low PE multiple on relatively low earnings, and that historically has been the right time to buy Imperial. It doesn't necessarily mean that the share price is going to race away in the next 6 months, but if you can buy it at an 8 multiple, if over a 3-year view, the business can grow its earnings by 15% a year, it goes back to a 10 or 12 PE multiple. That's kind of a formula for quite nice share price performance. Let's then look at the slide of total car and commercial vehicle sales. And one can see that that is a cyclical business. You went flat for many, many years, and then went towards 2007, the end of 2007, went racing ahead, came plummeting down, and you've had great growth over the last few years. But that's slowing now. Is it going to slow as badly as 2009?
I shouldn't think so, Pete. Hubert at the results presentation suggested that they're going to see flattish, if not slightly down, vehicle sales growth for the foreseeable future, but that it wouldn't reach 2009 type levels. I think interest rate hikes, tighter credit are certainly putting a lot of pressure on passenger vehicle sales, but the commercial sales vehicle unit is still performing very, very well, and I think it's creating a bit of an earnings underpin to that particular division.
So Imperial putting together a very nice kind of mix of business. It's well positioned for the future, even if right now it's under a little bit of pressure. We're going to take a break now. Afterwards, we'll ask some questions of CEO Hubert Brody.